In this lecture, we'll be solving some of the questions of capital budgeting. Before solving questions of capital budgeting, let us revise all the methods that we have done up till now, that is net present value, profitability index, as well as IRR. So we are first revising net present value. How to find out net present value? Present value of cash inflow minus present value of cash outflow. What are decision making criteria? If it is positive, we will be accepting the decision. If it is negative, we will be rejecting the decision. If it is equal to 0, then we are indifferent. Again, what does it mean if NPV is positive? That means we are earning greater than our required rate of return. NPV negative, we are earning less than our required rate of return. If NPV is 0, we are exactly earning our required rate of return. Same in profitability index. How to find out profitability index? Present value of cash inflow divided by present value of cash outflow. If PI is greater than 1, we will accept. Less than 1, we will reject. Equal to 1, we are indifferent. Same is the concept. If it is greater than 1, we are earning greater than our required rate of return. Less than 1, we are earning less than our required rate of return. Equal to 1, we are earning our required rate of return. NPV and PI always gives the same answer. They are same technique, just in one case it is subtraction, in one case it is division. So there the cutoff is 0, here the cutoff is 1. Then we understood concept of IRR. You need to logically understand first what is IRR. It is not expected, it is actual rate of return from the project. Right? Yes, it is forecasted. It is not actually earned, but it is an actual rate of return the project is earning. It is rate of return at which NPV is 0. It is rate of return at which NPV is 0. So it is what actually the project is earning. How we will be finding out answer of IRR without Excel? What we'll be doing is, by trial and error, we will be finding out a rate where there is a positive NPV. We need a rate where there is a negative NPV. So say this is a 20% rate and this is 30% rate. I will have to find out the range. I have got a range. The project is earning more than 20%. The project is earning less than 30%. So my project is earning between 20 to 30%. I have got the range. Once I have got one positive NPV and another negative NPV. Now I am not doing it logically. I am using the formula for IRR, which is nothing but base rate plus positive NPV divided by difference in NPV multiplied by difference in rate. If I'll use this formula, this is an interpolation, which is an approximation technique. I will be directly getting answer of IRR. These are the three basic methods that we have learned. First, all the questions will be dependent on either NPV or PI or IRR. Let's solve some of the questions of capital budgeting. This is C 5.1.1. All of us are ready with it? New Thoughts company is evaluating an investment proposal of 3,06,000. So if you want to do this investment, you will have to invest 3,06,000 rupees with the expected cash flows. What answer is given is cash flows. What we require is cash flows. We require always cash flows, right? And the cash flows which are given are after tax. So there is cash flow and they are after tax. So we don't have to find out anything. Everything is given. And what are the cash flows? At the end of first year, it is 1 lakh, 2 years, 1,20,000, third year, 1,50,000, and fourth year, 1 lakh. The company's cost of capital is 10%. Try to understand what does this also means. This means if the company's cost of capital is 10%, its minimum required rate of return is also 10%. If nothing else is given, you can take cost of capital as your required rate of return. Compute NPV and PI. It is not told us to take the decision. Still, we will be taking the decision. We will be just writing down that we will be accepting the proposal or not. Very easy question. At the end of 1, 2, 3rd and 4th year, directly cash flows is given. Nothing is to be done. They are after tax. Sir, we don't need to add depreciation. No, they are cash flow after tax. They are not profit after tax. So it is 1 lakh, 1,20,000, 1,50,000, 1 lakh. I will be finding out present value at the rate of 10%. So it is 1 divided by 1.10 raised to 1, 1 divided by 1.10 raised to 2, 1 divided by 1.10 raised to 3, 1 divided by 1.10 raised to 4. I'll be getting the answer in calculator. It is 1 lakh divided by 1.1 is equal to m plus 1,20,000 divided by 1.1 is equal to m plus 1,50,000 divided by 1.1, 1, 2, 3 times is equal to m plus 1 lakh divided by 1.1, 1, 2, 3, 4. 4 times is equal to m plus MRC is this is 3,71,081. 3,71,081. All of you are getting it? What is this? Present value of cash inflow. What I need to deduct? Present value of cash outflow. If I want to do this project, I will have to invest 3,06,000 rupees. 3,06,000. This will be my NPV. NPV is 3,71,081 minus 3,06,000. 65,081. This is my NPV. Positive, negative, positive. I will be writing down accept the investment proposal. It is not told to comment, but still I am commenting it. I also need to find out PI. PI is present value of cash inflow divided by present value of cash outflow, which is the 3,71,081 divided by 3,06,000. 3,71,081 divided by 3,06,000. It is 1.212. In NPV, you can write down rupees. In PI, you should not write down rupees. NPV is in rupees because this is in rupees, this is in rupees. PI is not in rupees. It is just a multiple. This was question number 1. We are going to 5.1.8. So 8th question. A company is evaluating a project that requires initial investment of 60 lakhs. We all are on 5.1.8. In a fixed asset and 12 lakhs towards additional working capital. Working capital, we have done it once. The project is expected to increase the annual real cash flow before tax by rupees 24 lakhs during its life. The fixed asset would have zero residual value at the end of the life of 5 years. The company follows the straight line method of depreciation, which is expected for tax purposes also. Inflation is expected to be 6% per year. For evaluating similar projects, the company uses discounting rate of 12% in real terms. The company's tax rate is 30%. Advise whether the company should accept the project by calculating NPV in real terms. Now, whether this is a factor of 12%, there is some mistake because this is also 12% and this is also 12%. Both cannot be 12%. Find out what is 1 divided by 1.12. It is 0.893, right? So this is 12%. Sure. What is this? This should be 8. No, if this is 12%, this would be 6%. Probably. Find out. 1 divided by 1.06. Yes. This is not 12%. This is 6%. So let us first find out just cash flows. So what is given, please try to understand. The project is expected to increase annual real cash flow before tax by 24 lakhs. Please try to understand the project life is 5 years and every year it will increase the cash flow by 24 lakhs. So it is 1 to 5 years. So I am not writing 1, 2, 3, 4, 5. I will tell you why. I am not doing this. What I am writing is 1 to 5. What is expected increase in real cash flow? Real cash flow, but before tax is 24 lakhs. Tell me, in this, depreciation would have been deducted or would not have been deducted? Can anyone tell me depreciation would have been deducted or not deducted? It is before tax. Yes. Is it alright? Why? It is real cash flow before tax. The answer is no. It is not yes. Real cash flows. Depreciation is a non-cash expenditure. It would not have been deducted from this particular figure. So for finding out real tax, first we will have to deduct depreciation. I can do this in two manners, as this is the first question. I'll be doing it by both the methods. First, I am deducting depreciation minus depreciation. Now sir, depreciation is by straight line method. Yes. So for all 5 years, the depreciation is going to remain same. Yes. Residual value, zero residual value. Right? How to find out depreciation by straight line method? Cost minus scrap value divided by number of years. This is 12 lakhs. All of you know straight line method of depreciation, right? Cost minus scrap value divided by number of years. So what is my depreciation? 12 lakhs. What will be profit before tax? See, now I am converting the name. Now it is no longer a cash flow. Once I deduct a non-cash expenditure, it is no longer a cash flow. So profit before tax will be 12 lakhs. Sir, for which year? For all the years, in all the years, this amount is going to remain same, in this amount is going to remain same. So if we have drawn 1, 2, 3, 4, 5 years, all the figures would be repeated. This figures would be repeated, this figures would be repeated. So we have written in heading 1 to 5 years. What is profit before tax? 12x. Minus tax. I told you never to find out tax. Profit after tax. What is the tax rate? 30%. So profit after tax will be 70%. 70% of 12x. It is 8,40,000. Will be profit after tax. All of you are knowing this, right? This will be 30%, so this will be 70%. Profit after tax will be 70%. But sir, I have deducted depreciation. Add back the depreciation. Plus depreciation is 12x. 20 lakh 40,000. $20,40,000, sir, will be cash flow for first year, yes. Second year, yes. Third year, yes. Fourth year, yes. Fifth year, yes. So instead of drawing 5 columns, I have written that in all the years my cash flow is going to remain same. Sir, how you got the hint that we should prepare only 1 column? Number 1, all the cash flow in all the years were same, 24 lakhs. Depreciation is by straight line method. In straight line method, depreciation remains same every year. So that figure is also same. There are no other figures except taxation. So all the figures are same for all 5 years. As I told you, as this is first lecture, I am giving you another method of finding out this 20,40,000 also that we have done in classroom. 1 to 5 years. What is cash flow before tax is 24 lakhs? Deduct depreciation. No. Why? Depreciation is a non-cash expenditure. Don't deduct it. Directly deduct tax. Minus tax. So this will be profit after tax. Profit after tax is 24 lakhs into 70%. 24 lakhs into 70%. 16 lakh 80,000. But sir, depreciation is not a cash expenditure, but because of depreciation there will be tax savings, which is cash benefit. So I should add that benefit, add it, plus tax benefit on depreciation. How to find out tax benefit on depreciation is depreciation multiplied by tax rate. What is depreciation per annum? We have already found out. 12 lakhs multiplied by 30%, which is the 3,60,000. This will be 20,40,000. Sir, which method you should follow? You can follow any method, but you should know both the methods. It is not so that you will not know this method and it will do. You will have to learn both the methods how to solve this cash flow. So, what are the cash flow from 1 to 5 years? It is 20,40,000. Is there any scrap value at the end of 5 years? No. Sorry. I will be finding out present value at the rate of 12%. Now, sir, it is given using discounting rate of 12% in real terms. Inflation rate is also given. Is it all? This will be doing in risk analysis in capital budgeting. Right now, you can ignore that inflation part. What is the discounting rate? 12%. So we can assume it is our required rate of return. Find out present value of at 12%. Try to understand this denomination means this. 1, 2, 3, 4, 5. and cash flow is 20 lakh 40,000, 20 lakh 40,000, 20 lakh 40,000, 20 lakh 40,000 and 20 lakh 40,000. Is it all right? And you need to find out present value of this at the rate of 12%. So you should not confuse that this is cash flow only at the end of 5th year. This is cash flow for all the years. So I am finding out present value of this. 1 divided by 1.12 is equal to m plus 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 5 times MRC multiplied by 20 lakh 40,000, which is 73 lakh 53,743. I have written it correctly. 73 lakh 53,743. Yes, you are with me or you are behind me? Alright. Now, let us go to working capital. This is present value at the rate of 12%. Alright. What is working capital? Can you tell me? These are all cash inflows. Huh? These are inflows. Let me also write down cash outflows. Cash outflows. At the end of 0 year, the cash outflow will be 60 lakhs. Is there a point of working capital? Yes. And 12 lakhs towards additional working capital. So 12 lakh working capital is required. As we have understood in introductory lecture, working capital is cash outflow for 0 year and it is a cash inflow for the last year. Alright. So along with the 60 lakhs at the end of 0 year, there will be working capital outflow of 12 lakhs also. So what will be total cash outflow is the 72 lakhs. This both are lakhs. Alright. Sir, it will be cash inflow at the end of 5th year. How much? 12 lakhs. Sir, we have already found out present value. Still, it is absolutely all right. You can also find out present value of this 12 lakhs separately. Whether you find out separately or whether you combine it and find out, your answer is going to remain same. Tell me one of the students why I cannot add 12 lakhs to this figure 73, 53, 743. Anyone? Why I cannot add this 12 lakhs to this? Or subtract? It is cash inflow, right? Yes. So this is outflow. This is inflow. So I need to subtract it. But why I cannot subtract it? Tell me the 73 lakh 53,743 is at the end of this 0 year. I have already found out present value. Present value means it is at the end of 0 year, right? This is at the end of 5th year. You cannot subtract it directly from here. You will have to find out present value of this. How to find out present value? 12 lakh into 1 divided by 1.12 raised to 5. It is 1 divided by 1.12, 1, 2, 3, 4, 5 multiplied by 12 lakhs, which is 6,80,912. 6,80,912. This now I can deduct. Sir, why? Yes. Alright. So this is 6,80,912 is your inflow. Why? It will be cash outflow at the end of 0 year and it is cash inflow at the end of 5th year. I am not combining it with this cash flow. I am finding out that answer separately. I cannot directly deduct 12 lakhs because it is at the end of 5th year. This value 6,80,912 is at the end of 0 year. So I can deduct it from this figure 73,53,743 minus 6,80,912. It is 66,72,831. What is this? Present value. It is at the end of 0 year of cash inflow. I have made a mistake, right? This 73,53,743 is inflow or outflow? 73,53,743 is inflow or outflow? 20,40,000 is cash inflow or outflow? Inflow. So present value will be cash inflow. This is also cash inflow. So I should add it, not subtract it. It will be added. This is not outflow. This is inflow. So inflow plus inflow is 73,53,743 plus 6,80,912. 80,34,655. This is the present value of cash inflow. NPV, present value of cash inflow minus present value of cash outflow. We are having present value of cash inflow 80,34,655 minus present value of cash outflow 72 lakhs. My NPV will be 80,34,655 minus 72 lakhs, which is 834,655. Rupees is NPV. They are not asking me whether to accept the project or not. Still, I'll be writing down accept the project because NPV is positive. One small question and we are going to go ahead. Why I have not found out this present value in this manner? 1 divided by 1.12 is equal to m plus 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 is equal to m plus. MRC recall multiplied by 12 lakhs. So why I have not done this? See, what I have done is 1 divided by 1.12, 1, 2, 3, 4, 5. I have not pressed m plus. I have directly pressed is equal to multiplied by 12 lakhs. This is how I have found out the answer. Why I have not done is equal to m plus is equal to m plus? Exactly. Cash flow is only in 5th year. It is not for 1, 2, 3, 4 and 5 years. Here the cash flow is for all 5 years. Here the cash flow is only at the end of 5th year. Again, this is categorized as easy question, not a very difficult question. This was 5.1.8. Next question is 5.1.13. Good to go. A company is considering the proposal of taking up a new project which requires an investment of 800 lakhs on machinery and other assets. The project is expected to yield the following earnings. They are not cash flows. Huh? They are earnings before depreciation and taxes over the next 5 years. These are the earnings before depreciation and taxes. See, all the figures are different. They are not same. So I will not be able to do 1 to 5 years. All right, I'll have to prepare separately for all 5 years. 1, 2, 3, 4, 5. The cost of raising the additional capital is 12%, and the asset have to be depreciated at 20% on written down value basis. Depreciation is WDV. So there is no question of same cash flow every year. The depreciation will change every year. So you'll have to prepare for 1 to 5 years. The scrap value at the end of the 5 years period may be taken as 0. The income tax applicable to the company is 40%. You are required to calculate the net present value of the project. So only NPV is asked. And advise the management to take appropriate decision. We will be advising in good manner. Also calculate IRR of the project. So there is no working capital, that is good. But we will be finding out first cash flow, and then we will try out to find out NPV and IRR. All right. See how I am solving the question. At the end of 0 year, first year, second year, third year, fourth year, and fifth year. What figure is given? Earning before depreciation and taxes. Earning before depreciation and taxes. In 0 year, there is no earning. Today, there will be no earning. 1, 2, 3, 4, 5. 320, 320. 360, 360. 300. After this, I'll have to find out depreciation. Depreciation is not by straight line method. So you will have to find it out for 80 years, all 5 years. 800 lakhs is the cost of machinery. Statement showing depreciation. Cost is 800. Rupees are in lakhs. Huh? All rupees are in lakhs over here also. Rupees are in lakhs. Depreciation is 20% WDV. So 800 minus first year depreciation is 160, 20%. Complete the chart. This is 640. Minus second year depreciation. 640 into 20%. 128. $640 minus 128, 512. Minus third year depreciation. 512 into 20%. 102.4. 512 minus 102.4, 409.6, minus fourth year depreciation, 409.6 multiplied by 20%, 81.92. 409.6 minus 81.92, it is 327.68 minus fifth year depreciation. 327.68 multiplied by 20%, 65.54. 327.68 minus 65.54, 262.14. This is WDV at the end of 5th year. I will have to write down depreciation for every year? Yes. Depreciation for each year is 160 for first year, 128 for second year, 102.4, 81.92, 65.54. I will be finding out next column earning before tax. How to find out? EBDT minus depreciation. EBDT minus depreciation. 320 minus 160 will be 160. 320 minus 128. 192. 360 minus 102.4. 257.6. 360 minus 81.92. It is 278.08. 300 minus 65.54. 234.46. I've got EBT. I will not be finding out tax column. I know from EBT how to find out EAT. How I'll be doing it is, I will be directly finding out EAT. How? EBT multiplied by, what is the tax rate? 40%. Multiplied by 60%. How? If tax says the 40%, earning after tax will be always 60%. So it is 1 minus T, EBT into 1 minus T. So my one column will be less. Is it alright? Because of this particular knowledge. EBT multiplied by 60%, that is 160 into 60%. 96. 192 into 60%. 115.2. 257.6 into 60%. 154.56. 278.08 into 60%. 166.85. 234.46 into 60%. 140.68. I am rounding it out to 2 decimals, right? How to find out from EAT cash flow? I have deducted depreciation. Now I will add back depreciation. So I will be getting cash flow from operating activity. This is the cash flows. How I will be finding out? EAT plus depreciation. So this column plus this column. 96 plus 160. 256. 128 plus 115.20. Which is 243.2. 102.4 plus 154.56. 256.96. 81.92 plus 166.85, 248.77, 65.54 plus 140.68, 206.22. This is cash flow from operating activity. All of you are getting it? All right. If I want to purchase this machinery, what is my cash outflow? 800 lakhs. That 800 lakhs will be at the end of 0 year. Negative purchase price 800 lakhs. You can do this work in working note separately. It does not matter. All right. This is where our answer will differ from the suggested answer, but our answer is absolutely correct. This machine was purchased at 800 lakhs. If it was purchased at 800 lakhs, then it is sold after 5 years. At what price? May be taken as 0. What is a WDV at the end of 5th year? WDV at the end of 5th year is 1, 2, 3, 4, 5. Yes. What is WDV at the end of 5th year is 262.14. At what rate it is sold? 0. A asset worth rupees 262.14 is sold at 0 rupees. Can you tell me there is a profit or loss? There is a loss of how much? 262.14. Is it all right? This is a capital loss? Yes. Sir, you don't have to pay this to anyone. This is non-cash. I agree. You have already paid for machinery. So at the end of 5 years, you are having a loss. It is a non-cash, agreed. But you will save tax on it. In introductory lecture, we have understood this. If you are having profit, you will have to pay tax. If you are having loss, you will save the tax. And what will be the tax savings? Will be 262.14 into 40%. Now you don't have to do 1 minus t. 1 minus t gives you after tax cost. Multiplied by t gives you tax benefit. What will be tax benefit? 262.14 multiplied by 40%. It is a 262 it is 262.14 multiplied by 40%, which is 104.856. 104.85 or 86. $104.86. This is tax savings will happen at the end of the year. Is it all right? It is a tax savings. Tax savings is cash inflow. So it will be tax savings at the end of the 5th year. And it is how much? 104.86. And it is positive. All right. So, is there any other point like working capital? No. I have taken into consideration depreciation, cost of capital and tax benefit. So, all the cash flows are under consideration, right? I can find out cash flow for all the year. Cash flow at the end of 0 year will be 800. This will be 256. Second year will be 243.2. Third year will be 256.96. Fourth year will be 248.77 and fifth year will be 206.22 plus, because this is tax saving, 104.86. It is 311.08. So I am having cash flow for all the years. 1, 2, 3, 4, 5. Cash flow is 256. You don't have to write it down again. 243.2, 256.96, 248.77, 311.08. Don't see the answer. Yes. What is my required rate of return? The cost of raising the additional capital is 12%. So I need to discount this at 12%. Present value at the rate of 12%. You need to find out present value of cash inflow. Sorry. Please all of you concentrate. I am giving you new method of solving the present value question. What we normally do to find out present value of this first year, multiplied by 1 divided by 1.12 raised to 1. Can you find out in your calculator what is 1 divided by 1.12 raised to 1? Is it 0.89 something? Is it 0.89? So which is this figure given? 1 divided by 1.12 raised to 1. This figure is 1 divided by 1.12 raised to 2. So instead of writing down factor, I am just copying this. Multiplied by 0.89. Multiplied by 0.89. Multiplied by 0.80. Multiplied by 0.71. Multiplied by 0.64, multiplied by 0.57. So this will be less error prone. You can just use your function of GT and find out the answer, right? By writing down this factor. Once again, what is 0.89? It is 1 divided by 1.12 raised to 1. What is 0.71? It is 1 divided by 1.12 raised to 3. What is 0.57? It is 1 divided by 1.12 raised to 5. Correct. Yes, the answer will be approximate because you have rounded it off to 2 digits. Alright, so the answer will be approximate. I don't have GT, so I'll have to use M plus. 256 multiplied by 0.89 is equal to M plus. 243.2 multiplied by 0.8 is equal to M plus. 256.96 multiplied by 0.71 is equal to m plus 248.77 multiplied by 0.64 is equal to m plus 311.08 multiplied by 0.57 is equal to m plus MRC 941.37. Minus present value of cash outflow 800, we have already found out 800. This is 131.47 is nothing but NPV of the project. This is my NPV 131.47. Now whatever calculations I'll be doing, that will be of IRR, because IRR is also asked. Uh, 931.47 is the correct answer, or there is a difference? 940, 941 point. All right, you have done it by taking this factor, right? All right, I'm changing the answer. I might have made some mistake. It is 941.37. So this is 141.37, right? 141.37. Positive, negative, positive. So as per NPV, you should accept the project. Is it all right? And this is my NPV, present value at the rate of 12%, 141.37. All right. Now I need to find out IRR. For IRR, I will require one positive NPV, one negative NPV, so that I can decide the range. Should I try out at 10% or should I try out at 14%? Because both rates are given. 10% and 14% factors are given. Should I try out at 10%? Will the project be earning 10% or more than 12%? More than 12%. So I will try it out with 14%. Find out NPV at 14% multiplied by 0.88. No need to write down cash flows again. Huh? 0.77, 0.67, 0.59, and 0.52. You need to tell me present value of cash inflow. What is present value of cash inflow? 893 point minus 800. So here also it is positive, not important for us. 93.20. Try it out at 16%. Also, I am getting positive NPV. Try it out at 20% then. Because at 16% also there is positive NPV. Find out at 16% and 20% both. I want NPV at 16% and NPV at 20% if anyone is having. NPV at 16 also you have not got? It is? It is 50.72? Okay. $50.72 is NPV. At 20%. Negative 26.84. Even if your answer of NPV is not right now in your book, please try to concentrate over here. At 16%, my NPV is 50.72 positive. At 20%, it is 26.84. Negative NPV at 20%. Can you also tell me what is your NPV at 12%? 141.37? 141.37 is NPV at the rate of 12%. I want to find out IRR. I can use these two figures because one is positive NPV, one is negative NPV. I have got the range. What is the range? Is my IRR will be 16% to 20%. I will be using interpolation technique to find out the answer. Every time I will not do it logically because it becomes a very lengthy process. IRR will be is equal to base rate. What will be taken as base rate is 16%. Plus positive NPV divided by difference in NPV multiplied by difference in rate. Base rate is 16 plus positive NPV is 50.72. What is difference in NPV? 50.72 minus 26.84. No, it is minus. So it will become plus. It is 50.72 plus 26.84. It is 77.56. Multiplied by difference in rate. What is difference in rate is 4. 20 minus 16 is 4. This answer will be 50.72 divided by 77.56 multiplied by 4 plus 16, which is 18.62 percentage. All of us are good, should be good with IRR. Can you tell me what is the project NPV? Last boy, last bench. What is project NPV? Today morning you were saying 0? Yes? Okay, I'm not able to hear you. It is 141.37. It is not 0. NPV is NPV at required rate of return. So project is earning 12%. It is earning exactly 18.62 percentage. All right. Please understand, they are asking us our advice. I will be writing advice specifically. Advice. As NPV is positive, also IRR is greater than required rate of return. Project should be accepted. So see, in my advice, my logic is also shown. I am also telling to the paper checker that I know what is the meaning of NPV and what is the meaning of IRR. This was a good full-fledged question. It was not asked in any examination. It is from revision test paper of May 2020. It is full-fledged because you find out less question with WDV method. You don't find out majority of question with WDV method, because then question becomes of 10 marks or 12 marks. You will have to calculate this one chart more. You will also have to calculate the tax benefit on depreciation or tax cost on depreciation. Tax cost on capital gain or tax benefit on capital gain. So this is all for this particular lecture. We will be doing all other sums in next lecture. Thank you all. You can